Good morning and welcome to the Killik & Co market update. It's been another decent week for markets, and in fact November was the best month markets have had for 3 years, and the reason is still this hope that interest rates have stopped going up. Here's the MSCI World Index over this year to date. It's up over 15%, and you can see that July to October was a bit weak, but all that lost ground was made up in November thanks to the lower inflation numbers we've had for both the UK and the US. It's not just equities that have been doing well, we've also seen some rises in bond prices. The longer a bond has until its maturity date, the more sensitive it will be to changes in interest rates. On this chart, we have the changes in the prices of ultra-long, long and short-dated gilts. Ultra-long, shown in the pink, have more than 13 years until maturity, long in the purple have 9 to 13 years, and short in the green have less than 18 months. Look how much prices have moved during the last 2 years as interest rates have risen. In particular, the ultra-long gilts are down 50%. You can also see that big wobble in autumn last year when the mini budget happened. If you look very closely, you should see a slight improvement in prices over the last month or so, and this is because interest rates are not expected to rise anymore. If interest rates start coming down, you would expect bond prices to go up. We've got our own bond research team here at Killik, so do give us a call if you'd like to talk about bonds in more detail. This week, the latest UN climate conference has begun, known as COP28, and it's hosted by the UAE. Sadly, it didn't get off to the best start following rumours that UAE had decided to use the conference to agree on new oil and gas deals. The International Energy Agency has set out the below 5 criteria for success if the world is to meet the climate change targets set out in the Paris Agreement. The first is to triple global renewable power capacity, and then to double the rate of energy efficiency improvements, and then commitments by the fossil fuel industry to align activities with the Paris Agreement. Fourthly, to establish large-scale financing mechanisms to triple clean energy investment in emerging and developing economies. And finally, to commit to measures that ensure an orderly decline in the use of fossil fuels. Unfortunately, the renewable sector has struggled of late due to increases in the costs of financing and building new renewable power developments, while at the same time, the prices of fossil fuels have risen due to the supply shortages that have come about due to Russia's invasion of Ukraine. Here we've got the S&P Oil and Gas Index in pink versus the S&P Clean Energy Index in green over 5 years. Clean energy has surged ahead in 2020, but the tables have turned since then. So we'll be watching the conference very closely to see if any agreements are made that might make a difference to how this chart looks going forward. And finally, reporting season is virtually over, but we have had a couple of companies reporting this week, one of which was Intuit. Intuit is an accounting software company that owns TurboTax and QuickBooks, both of which help individuals and businesses with their tax returns. Intuit has experienced particularly strong growth in the areas that deal with the self-employed and with small businesses, one reason being that more and more people now have side hustles. Intuit is also a business that has been able to use automation to make itself more efficient. So do give us a call if you'd like to hear about this company in a bit more detail. We've got no covered companies scheduled to report next week. Things are quietening down as the Christmas countdown begins. So have a great weekend, and we look forward to seeing you next Friday.